Welcome, everyone. So if you're an entrepreneur or just someone wondering about what the story is on loans in 2025, you should read this. Today we're taking off the masks, the truths behind the loans, what lenders may not tell you, the fees that can sneak up on you, the tech innovations making a difference, and real-life stories from people just like you. Nearly 60% of small business owners feel trapped by loans, often hiding costs. In a rapidly evolving digital economy, the ability to discern through the fog of information surrounding loans is not merely prudent, it is a matter of survival. So pour a cup of coffee, settle down into a comfy chair, and let's get into the wonderful world of loans. The new era of lending, a 2025 perspective. In the year 2025, the loan industry has changed tremendously. No longer do you have to stand in line at a bank or submit piles of paperwork. Artificial intelligence and blockchain-driven digital lending platforms of today are reshaping the way we borrow money. Now consider this scenario. You log into an app that instantly pulls your credit history, scans your financial data in seconds and offers you tailored options for loans, all before you step out the door. That's the modern technology power. But as with any revolution, there's a downside. Let me tell you about Sarah. Sarah was a first-time entrepreneur and had just started her eco-startup. Enticed by the prospect of instant approval from a digital lender, she submitted an application for a loan online. Everything seemed great until she started getting her monthly statements. Hidden fees, variable interest rates and unexpected penalty charges started eating away at her cash flow. Sarah's story is a sobering reminder that as technology streamlines access to dollars, it also has a tendency to obscure the fine print. Loans featured in 2025. Now, let's go through each of the loans 2025 has to offer. If so, there is a loan available for you whether you're starting a new business, getting a business off the ground or even in need of debt consolidation. But each has its own pros and cons. Traditional bank loans. Banks still have their part to play, even in 2025. If you have good credit, loans in this category tend to offer some of the best rates. But getting approval can be a slow and inflexible process. But imagine how much time you will have to wait just to have your application processed through so many checks. That's what happened to Mark, a restaurateur who wanted to open a new branch but couldn't find traditional banks that moved quickly enough. Loans from digital and peer-to-peer sources. Digital lenders are booming. They provide speedy approvals and flexible terms, frequently using AI to measure risk. John, who founded a tech startup, chose a peer-to-peer loan. The approval came almost immediately, and he received the funds needed to launch his product. But the catch is that variable interest rates and hidden fees can sneak in if you're not careful. Crowdfunding and microloans. For creative projects and smaller amounts, there are crowdfunding and microloans. So, Emma, a freelance artist, relied on a microloan for her online gallery. It was a transparent process driven by the community. Yet not every tale ends happily. Some entrepreneurs experience the pressure from investors looking for returns in the near term, leading to burnout and compromises to the creative vision. There are advantages and disadvantages to each type of loan. The trick is to do your homework and know exactly what you're signing up for. Loan agreements, the unseen realities. Let's peel back the curtain on loan agreements. When you spot that shiny offer online, consider this: what's hiding in the fine print? Many of these digital lenders offer shiny interfaces to mask complex fee structures. Let me show you an example. Let's assume Alex is a small business owner in the retail sector. To find the best loan, Alex settled for a seemingly attractive loan with a low, advertised interest rate. But months into his repayment plan, he found undisclosed processing fees, prepayment penalties, and sudden rate hikes when his score dropped slightly. This had him frantically trying to reset his cash flow, and it almost sank his business. What do you need to be cautious of? Hidden fees, processing fees, origination fees, maintenance fees, etc. Variable interest rates. Data-driven loans now often come with rates that can vary monthly, depending on market conditions, and possibly your payment history. Prepayment penalties. Some lenders impose charges for paying off your loan in advance. Automatic renewals. Watch out for loans that automatically renew, adding to your total debt without your informed assent. You need to read each line of your agreement. Ask your lender to clarify any terms that are vague. Transparency is critical. If something isn't clear, it likely isn't. Wiser ways to handle loans. Well, how the hell can you get out of this quagmire of loans in 2025 without falling into the bears peeking from behind the bushes? These are some strategies that can support you in obtaining a loan on your terms and ensuring the health of your business finances. Do your homework. Research the lender before applying for any loan. Research reviews, ratings and other borrowers' experiences. Take the case of Maria, an entrepreneur who researched lenders for weeks. Her hard work paid off, She located a digital lender that displayed all fees transparently and provided a fixed interest rate that would work with her business model. Check and improve your credit score. Your credit score is your bargaining chip. A higher score can unlock better rates and terms. Michael, a freelance consultant, found that a mistake in his credit report was artificially boosting his debt ratio. He raised his score through a credit repair service, then got a much-needed business loan at a lower rate. Negotiate the terms. Don't be afraid to negotiate. Ask for a lower interest rate, waive specific fees, or even request a grace period. Lisa, who owns a boutique marketing firm, negotiated the elimination of prepayment penalties with her lender. Her persistence has already saved her hundreds of dollars, and potentially thousands over the course of her loan. Use comparison tools. For a thorough comparison of loan offers, there are many online tools and platforms that can help. Use these resources to make sure you're getting the best deal. Understand your cash flow. Get a clear picture of your cash flow before deciding to take on a loan. Understand when you'll get paid and how loan repayments will affect your day-to-day operation. A software entrepreneur named Tom learned this lesson the hard way during a dry spell for his company. He was able to avoid hard metrics by checking up regularly on his cash flow projections, thus preventing himself from taking on more than he could handle. These strategies are not mere tips, they are lifelines. As the loan industry becomes more digital and complex, having a proactive mindset can make all the difference between thriving or just surviving. Future trends in loans. What trends should you pay attention to in the loan industry as we move forward? 2025 is only the beginning of a new normal combining technology and finance in thrilling, and sometimes daunting ways. Blockchain and smart contracts. Imagine if each loan agreement was recorded on a shared, secure blockchain. Smart contracts are self-executing contracts with the agreement directly written into lines of code, automating and enforcing performance without the need for intermediaries, making them error-free and transparent. This technology has begun to be piloted by a number of forward-looking banks. AI-powered lending. Advanced artificial intelligence is honing risk assessment models to provide customized loan arrangements. That means quicker approvals, but it also means that your data is analyzed on a constant basis to evaluate how you will act financially. For example, a Silicon Valley startup founder used an AI-based lending platform that approved her loan within minutes and provided ongoing financial insights adjusted to her company performance. Eco-friendly loans. Sustainability is more than another buzzword. Banks are starting to offer green loans that incentivize them for going green. These loans may also be offered at lower interest rates or doled out with tax incentives. 1. Increased regulation and consumer protection. With the digital lending industry boom, regulators are intervening to protect consumers from opportunistic practices. In fact, you can expect more clarity, access to your credit information on the go with instant downloads, and a better dispute resolution process with more channels for resolution support. While these trends are encouraging, they also mean that borrowers need to remain educated. The more you know about where the business is headed, the better you are able to take advantage of these innovations. The reality of loans in 2025 is that it is complex, evolving and fraught with opportunity and risk. We've looked at how technology is changing the loan process, the minefields that lurk in fine print and the smart steps you can take to protect your business. So, whether you go for coming to the traditional bank, digital lending, or even crowdfunding, just be updated and always read the fine print. Remember the stories we told today: Sarah, Alex, Maria, Michael, Lisa and Tom and so many more remind us that knowledge is power. But with a little homework, vigilance over your credit, and a strategic approach to negotiation, you can get the upper hand in the loan landscape and set your business up for a more secure financial future. If you found this video valuable, make sure to like, share it with your entrepreneurship buddies, and hit that subscribe button to never miss another To The Point Taste in Finance. Comment below with your own loan stories or any questions you have. We love hearing your stories. Thanks for tuning in, and until next time, be smart, be curious, and stay on the path to building wealth.